right? Let's talk about equity investment for sustainable startups. So a VC friend of mine out in Utah recently, I was talking to him about this, and he said he loves opportunities when, you know, the environmental impact and the sustainability aspect of it are the frosting on the cake. And then he said the problem comes when the entrepreneur or the startup thinks that the environmental aspect or the sustainability is the cake. He said causes feel nice, but the only color of green that he cares about is the money in his pocket. And so I started thinking about that more, and in preparing for this, I read something, maybe some of you know it, this Global Cleantech Innovation Index. And it's a 2014 report. It's published by an advocacy or consulting group, the Cleantech Group, and the World Wildlife Foundation, right? And it makes a big deal about surveying 40 different countries and critiquing them and ranking them in terms of their clean tech and clean energy initiatives. And it says Israel's first, Finland's second, and the United States is third, right? And one of the reasons why it is so upbeat, it says that the investor community has invested $41 billion in clean tech startups over the last 5 years. This is a report that's a year old now, right? So $41 billion in clean tech startups over the last 5 years. And it forecasts that that's going to nearly double in the, or that it doesn't forecast, it says that's doubled over the last 5 years, right? So what it says, you know, referring to that because of all that investment, that startups can move beyond that, and the clean, sustainable industry can move beyond those financing challenges now, because we really need these companies to scale up, right? We need industry to get involved. So I juxtaposed that against something that a guy named Eric Westhoff said, and he writes a subscriber-only newsletter on venture investing in renewable energy. So his argument is, quote, clean tech venture capital is a wasteland. He says there are a couple notable successes like Tesla that everyone wants to point to, but that overall the segment of VC has underperformed to the extent that the total dollar volume and deal count are stagnant. And not only that, early stage deals, right, the new technologies are absolutely rare. You have the Global Clean Tech Report highlighting, you know, 40% of Finland's public sector R&D dollars are going to clean tech. We think that's awesome, right? Well, does anybody know Finland's R&D investiture? Right? The public sector, it's about a couple $2 billion. So their 40% is somewhat less than 800 million. Right? So we have this idea that there's a huge amount of capital. Yes, but in 2013, overall investment in fossil fuels was about 1.1 trillion. So juxtapose 800 million and 1.1 trillion, right? And Finland's one of the best, right? Westhoff is saying that venture capital in this space is all but dried up, and he's talking about $5 billion being all but dried up. So I think that the points for me in all this, there may be 4 or 5 of them. And first, I think that businesses, first and foremost, need to focus on demand for whatever it is they're selling. The UK Department of Business Innovation and Skills estimated in 2011-2012 that the total global sales flow for low carbon and environmental goods and services was about $5 billion. Right? That same year, this Clean Tech Report, the Global Clean Tech Report, says that global investment was about $317 billion. So when your investment is 10x your return, the model's sort of on its head a little bit in this space. So first, I think businesses need to focus on demand.